Good morning. You ready to go? Yeah, who's ready to go? Who's alive? Cheers. Yeah. All right. Good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We're stationed around the world. It's kind of like Fight Club. What's the number one rule of Fight Club? Don't get yourself killed. What's the second rule of Fight Club? Never forget rule number one, right? Something like that. Okay. Number one, the FX Bootcamp credo. Don't do something stupid and get yourself killed. Do whatever it takes to achieve the mission. Ultimately, you will win the war. Capital preservation, capital appreciation, so on and so forth. Hang on. Hey, I discovered this thing. It's called water. It's weird. Anyways, so good morning. The raison d'etre is trying to combine technical and fundamental analysis to create trade plans for today, maybe even later this week, maybe even the rest of the month, maybe even the rest of the year. So ask good questions and I'll do my best to address them. If I don't get to it, your question, I apologize. That's why I do a daily webinar. I've only done a daily webinar since YouTube was a tiny startup, not even owned by Google yet. And before that, I used something called Hotcom. Years before YouTube was even a tiny little startup. So I've been around, I'm accessible, and I'm here to help. So if I don't get to your question today, I hope I can get to it tomorrow. Might be a good reason to subscribe, huh? Wink, wink, nudge, nudge. So thank you for being here. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So anyways, I was tossing and turning last night because I decided not to put my swings or my trades on as a sort of a risk aversion play, and that's terrible. Those are the worst times when you can see potential, but you decide not to take them. So we'll go through the charts and see if I made the right decision or not, but that's what happened. Anyways, cool. So great. Thank you for subscribing. Thank you for clicking the thumbs up button. Now, as a currency trader, you will have to choose a broker. Yep. You need an execution partner for your trading business. Now, the way I chose my broker was during the Swiss bank debacle, is what I call it. Craziness occurred in the post minutes of the Swiss bank pulling its peg. Now, the day before it pulled its peg, it said it would never pull its peg. So it was really a blindside. And what happened was some brokers were exposed that maybe they weren't executing the trades into the interbanking system. Maybe they were trading against their clients. And they got caught holding the bag, and some brokers went out of business, some got kicked out of the United States, and some lost hundreds and hundreds and hundreds and hundreds of millions of dollars overnight. Now, Trader's Way was just fine. And that's what I want to hear. Now, in my humble opinion, what that tells me is that they actually execute your trades into the interbanking system, and they don't hold it, so they were not adversely affected at all. It wouldn't affect them. It affects the if you made a bad trade, you're going to lose money, but the broker going out of business is like, what does that mean? Why would a broker go out of business if, you see what I mean? So anyways, after that, after there was a huge stress on the global foreign exchange brokerage business, Trader's Way was just perfectly fine. A little boutique foreign exchange trading firm. And I'm like, you know what? That's what I need. I don't want someone trading against me. That doesn't make sense, right? I don't want to be booked. So whatever. So that right then and there, they earned my loyalty and respect. Now, that loyalty and respect that they've earned has been reaffirmed. I told a story recently where I was working with somebody and they were having troubles with their trading. I'm like, let me see your account. So we log into their account, and it was with a big broker in the UK, big one you've heard of, and we log in, and I found out that the client was paying negative swaps on both sides of the exotics trades. The trader was double dipping on them. I'm like, that sucks. That sucks. Skimming off the top, huh? So anyways, that once again, not through sort of a marketing message or a banner, hey, we're the cheapest, you should go with us. No, like all that kind of stuff. Just literally, how does Trader's Way interact with the market and how do they treat their customer base? All you have to do, for example, is go to specification, compare your broker with this broker, and you probably will find Trader's Way is better. That's it. Oh, you were looking at that. Let me do it again. All you have to do is go here, like Eurozar, for example, is going to be a big one. Where did it go? I just had it. Oh, here it is. It's highlighted. Okay. All you have to do is go to specification on Eurozar. See, you earn money on one side, you lose money on the other. That's how it's supposed to be. That's the exchange rate differential. The big broker I was looking at charged you negative on both sides. Instead of paying you, they took all the money you were owed and then charged you money on top of that. Okay? So anyways, that's one way to compare apples to apples. So you might go with a broker that promises you to be 1/2 of a pip cheaper, but you'll find that they're doing other things to screw you over. So, hey, whatever, tradersway.com. Okay? All right, cool. Okay, cool. Oliver says, Wayne, have I read The Unknown Market Wizards? No, I have not. Okay. I like those books. The original ones are really interesting. The only downside is, remember, they're extraordinary, which is another way of saying very unique traders that have found extraordinary levels of success. That's how they got into the book, which would not be norm. And some of the ways that you can achieve those results is through aggressive risk or a one-way bet kind of thing, or other things. And what I would like to glorify instead, Oliver, right? Yeah, like it can be done and people are doing it. That's great. But what I would like to preach, and this is another Markets Wizard interview, is that just doing the job over long periods of time is enough. I don't want you to try to be extraordinary. Okay? A very mediocre trader on Wall Street. I just shared this a few days ago with my groups, and he's 68th best. He's doing about 24-25% a year, which is great. He's doing about 2% a month, which is fine, and he makes $90 million a year, which is good enough. Okay? I shared with my group last night a trader that claims that, a trader that has 73% win rate. 73% win rate. What do I typically say about a trader with a high win rate? They don't know how to take a loss. So, would you guys like to invest into a Forex trader that is right 73% of the time? Sounds good, right? No, it's pathetic. Not the win rate. He didn't make any money. He doesn't make money. He barely even compensates his clients for the risk that he took with the money. Oliver says, I think you could do better. You don't want to do better. I don't care about a win rate. An investor doesn't care about a win rate. An amateur trader cares about a win rate. So I proved to the group, I'm like, look, 73% wins. Doesn't make any money. The only return they made had to do with the risk was taken. There was no compensation for the risk. So even though there was an absolute return of some money, it wasn't a lot of money. And the pippage-wise sucked. But right? So what did it mean? Lots of winners and hardly any pips. They never let their winners run. Sucks. Crappy, lame, uninvestable trader, and they're bragging about it. So they're only going to attract dumb money, and dumb money is going to try it, and guess what? They're not going to get any return. It's a joke. Okay, traders in my live group make more than that fund made in an entire year. They've done in less than a month by letting winners run. Now, maybe not every month gives our group, the opportunity to get those big returns, but several times a year, definitely. And we're talking in a period of 3 weeks, we've done way better than that group has done in an entire year. But they're right 73% of the time. It just doesn't make any money. So what do you think matters most? What if you only had a 50% win rate, but you made a boatload of money and the return you made was significantly greater than the risk you took, so you have a fantastic Sharpe ratio? I mean, that fund, even though it was right 73% of the time, its Sharpe ratio was so low it basically didn't even have a Sharpe ratio. Any lower and it would have been a negative Sharpe ratio. It's just amazing, right? So I'll teach you real good. I like the way you trade. Okay? So I got your back, dog. Got your back. So anyways, interesting, right? Cool. Pig up, euro down. Good enough for me. For the last 3 days, I've said I don't even want to look at euro. Well, maybe that's why. Kitty cat roaring back. Okay. Aussie trying. Kiwi trying. Swissy all over the place. That's fine. But dollar up, yen up and down, up and down, up and down. Okay, fine. It was down and then it was up. It was down and it was up. I think I know why technically. Okay, so let's go explore that. I guess we'll just start with yens if that's okay. Okay, all right. So I decided not to buy this, actually anything last night. Our plans were stuff like this. This was the plan. Okay. And you can see it somewhat happened. Kicked off the 21 and went up. But if my concerns were we were challenging key places in which a bear would want to sell for the first time in a bit. Okay? And so I was worried about that. So I thought, a couple of things could happen, right? It could do this. I don't think so. I don't want it to, but it could. Or I could kind of do like this kind of stuff, right? And then the next week I could do this kind of stuff. So I was going to kind of let it happen. Now, I think we got some challenges way up here, but that's next week. Then we're going to have a challenge here. Then we're going to have a challenge here. But I would still start buying dips with the assumption of going even higher. Okay. So cool. So now we're back here, and we got to figure out what to do. We got to climb back above this pivot, don't we? So that's kind of the battle we have going on right now, right? That some traders are going to try for this, and some traders are trying to do that. And so we're right in that zone where either than that can happen. So there's sort of the bottom, even though you could use the monthly pivot. But that's where our technical bottom is. And then there's something going on in here. There might be something going on in here. We obviously have something going on in here. And those are our battle lines today. Those are our trenches. Bulls and bears are in those trenches. Okay. Raymond says, can we get a moment to thank the day trading group and Uncle Wayne? Oh, and the Great British Pound. What a beautiful setup. Cool. Apparently you guys, apparently you caught it. Looks like Raymond caught it, or Johnny caught it too. Yeah. Cool. 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 Fib Wars, yeah, basically, right? Hope got it. Cool. So interesting. So I'm close on this one. Okay. So one of the things I really wanted to see on a lot of these pairs, and one of the reasons why I didn't trade, was I'm trying to allow the 21 to cross above the 55. And then I'll be like a monkey throwing feces, right? I'll be a monkey throwing trades after that. But I'm trying to, let the volatility sort of work its way out. The volatility comes from disagreement, right? Buyers, sellers, but right? I'm trying to get one team to lose some confidence. And ideally, I want the bears to lose confidence. Okay? But this is the weekly resistance. Okay? So there's a reason for this. And, a bear is going to fib this, right? So they're going to look at this as a 50%, 382, 618. So I believe there's a bear sitting right around here. So if we squeeze them out of their positions, then there's going to be a lot less bears to push back in the near future. Okay. Lucas caught the end. Okay, cool. Right? So you can see some of these are great, but look how quick the collapse. And we've been seeing this recently. It just shows you that there's a lot of people paying attention, and for it to happen this quickly, I don't think there was a group of 10,000 people waiting to sell it. I think there were just a ton of orders there. Why were there a ton of orders? Well, both weekly and daily pivots said down, or maybe down, potentially down, right? Or out. Really, it's out, but it seems like there's down and out. Okay? Is that right, Made-up? 99 pips while sleeping, right? You did a 33.99. Nice day trade. Cool. So anyway, so you can see these are being respected. These are prices which we understand. My fear is always that we get moves like this and we don't understand. It's not, you start searching why did they get out at 84.14 or 84.13? Why that? Why there? I don't understand. No, actually I do understand. Okay? So good, good. But we know they're using the same tools as we are. And so now you can really start to understand your enemy, per se. Where will they buy? Where will they sell? Where will they enter? Where will they exit? Where does their fear lie? How would a bear feel about being up here? Scared witless, right? So, yeah, okay, so we understand the complexities of where we are. Okay, this was the buy zone. Okay, we covered this on Sunday, by the way, when we were here. This is the buy zone. Okay, and we're stepping up. So bulls need to now act and take over. Okay, but what I've been dealing with is this is still technically a bearish market, and really, it could, even though you don't want to hear this, technically this could come all the way back down. So I got to play it that way, and that's why I played it conservative. Okay, may not be the right decision, but it was a decision. Okay, so you can see on this one, this started, right, and now is double topped at fair market value in the sell zone. This is the sell zone. We knew this on Sunday. Okay? And what happened when we hit fair market value at the sell zone? Collapsed. And you're like, oh, too bad, man. There was a 21.55 up. Yep, there was. Not here. Not here. Okay? Remember, in the first week of November, if you were a bull, this chart told you to stop buying. Okay? If you're using MACD, you probably got the heads up right about here, your MACD collapsing, and this is your MACD dropping below the waterline. So there's a lot of like, whoa, settle down, right? Settle down. Well, I'm looking at this chart now, and it still says, don't buy it, Wayne. Don't buy it, Wayne. Don't buy it. And then I go back and I'm like, but on the hourly. And it's like, no, it's only been one good day. One good day ain't good enough. In a long-term trend, it ain't good enough. It might be a beginning, but in this case, okay, this 55 says look for a double bottom, and then now we might get a higher high. So it could be 3 or 4 days more. But if it did that, then next week, I'm throwing down trades like a monkey throws feces, right? Okay. Michael says, do I commonly look at fair market value? Well, in my book, what I talk about is its uses when you're a million miles away. So when you're up here, and this goes back to Theta's question maybe even a week ago, how do you know if it's overbought or oversold, overpriced, underpriced? Well, this way it's like saying, well, if this is price and this is the fair market value, it's really overvalued. And then in my book, I talk about the farther price pulls away, above or below doesn't matter. It's the differential. The farther you pull away from the fair market value, the more it wants to snap back like a bow. Okay? The more you pull back on the bowstring, the more it wants to snap back to rest. Okay? And that's that built up tension. The other way you could look at it is you're like, oh my God, you're 2 standard deviations from the mean, eh? Okay? But, okay? Hope is like, the language is grossing me out. I'm trying to paint a picture, right? It's called anchoring. I'm trying to anchor. Thank you, Ashish. Okay, 1.7. Great. Okay. So what what I would like to see is some liftoff. And if you're going to try to bet on this one, you're going to try to bet kind of like this and use these, the closer you get to 80, the more you want to kind of take a shot and take it north if you're going to be betting on this. Looks like instant reaction is yen weakness across the board. That is risk on. That's very bullish. So remember, it's bullish on a 1 hour, but bearish on a 4 hour. So I don't want to trade euro, but let's say I was. Okay? If you were in this situation, double bottom on an out zone, this is an out. Okay? Not an in, that's an out. But it's going up. Once you approach this 4 hour 21, you should probably out there. So this is bearish out. And this is a bull out. Okay? And then you might say, well, what's the point, Wayne? If I buy it at 130 and it's only going to go up to 130.40, there's no meat on those bones. Why should I do it? I said I wouldn't do it if I were you. If I were me, I wouldn't do it. Okay? But you can do whatever you want. Okay? This is America. This is free country. Well, sort of anyways. It's mostly free. Okay? So, okay? And then this predicts, and then maybe, but then you got problems here, you got problems here. So you got to tiptoe gently into that good night. Michael says, I love Wayne, but I hate it when he doesn't answer my question. Well, dude, I'm doing a lot of things, bro. But I answered your question. What are you talking about? Okay, I answered that. I just spent a couple of minutes on it. Okay. Cool. So all good news, man. All good news. Oliver's like, the secret to Forex is one thing. Yeah. Data came out already. I know. We already talked about it. It's already happening. Are you executing your trade plan? Oh, well, Michael. Okay, before I spend too much on this, let me do this. I look for 5 seconds to 10 seconds and I read comments. I pull out a question. So I find a question and it takes me 5 seconds. Then I give you a 5-minute answer. Am I reading the chat while I'm talking for 5 minutes about a complicated issue? No. Okay? But if you need, I think you can super chat, throw it up there, and make sure I can see it. But, bro, relax. I'm doing my best. Doing the best I can. Okay? Yep. All right. So, cool. We're kicking off the 21. That's very hopeful. Okay, we've had our nice pullback, basically tickling a psych level, and we got positive news that is front-running tomorrow's trade. This might be, right? Okay. Well, I think your question had to do with multiple time frames. Which one is right? They're all right. Okay. 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 So anyways, this is all good, man. This is all good. This is great. Everything's going great. We'll pull up the indice here and see yen weakened, but not dollar. Remember, dollar's got more complications attached to it because we're talking about some people are going to say, oh, no, that that means inflation's out of control and the Fed will have to raise interest rates and bond yields are going to... And others see it quite differently. Did you guys watch the Kashkari interview yesterday? No, Ahmad, there's two auto installers. One says MT4, one says MT5. Okay. Okay. So interesting, right? But yeah, did you watch the Kashkari interview? How about the RBA stuff? You guys on that? Okay. Okay, did you watch the speech? Did you read the minutes? Kashkari is a voting member of the FOMC, Harvey. Okay. Bloomberg. Let's just try Bloomberg. To be honest with you, I don't know how to spell his name. Kashkari. Wait, that's not Prince Andrew, is it? I don't think it is. I'm like, oh my God. Kashkari. It's with a K. Oh yeah, we got the Fed chair announcement coming up. It was imminent a year ago. It was imminent a day ago, I should say. Kashkari. Look at this. Typical, right? All the news that doesn't matter. Boris Johnson's father accused of inappropriately touching a conservative MP. Like, does that mean hitting or groping? All right, I'm going to have to type this in. Kari? Does anyone know how to do it? Doctor? It is Kashkari. Is it our friend Cash that logs in? Where's the interview? Markets, Kashkari, Lagarde, barely on inflation risks. That's it, but all right, this is probably the interview. Okay. I don't know how long it is. I got the stupid ad going. So, I don't know. Take a look. So, like, I ask you to just know. I don't want you to have an opinion. So, this is 16 minutes long. This is pretty good. Okay, so you're going to have to watch this. So, I don't want you to have an opinion. What the heck? I paused it. I didn't turn it on. Okay. All right. I don't want you to have an opinion. I want somebody to say, if somebody says, hey, what do you think about all this inflation? Is it transitory? Is it not transitory? Well, a voting member of the FOMC, Kashkari, recently was interviewed by Bloomberg. It was an extensive interview. And this is what Kashkari, a voting member of the FOMC, thought about inflation. Okay? Vodka. Kashkari is the head of one of the regional banks of the Federal Reserve banking system and a voting member of the Federal Open Market Committee. This guy influences whether the Fed will raise interest rates or not. So if someone else said, well, what do you think? Is the Fed going to raise interest rates next year? Well, I just watched an extensive interview that Bloomberg conducted with Kashkari, a voting member of the FOMC. And here's what he thinks about raising interest rates and inflation, whether it's transitory or not. I want you to have that kind of factual response, not like, oh, well, this is what I think. Okay? Okay? So I want you to understand. I want you to know. When is Australia going to raise interest rates? Maybe in 3 years. Why? That's what Governor Lowe said. Not my opinion. Cool, right? So I want you guys to know. I want you guys to pay attention. I want you to do the research. Okay? I think I showed, even just yesterday, that I spent hours doing research over the weekend. Okay? Is he a dove? Is he a hawk? You should know. Watch the interview and make a decision. Okay? Some people might say, well, what is a hawk? What is a dove? Do some research. Okay? There's going to be a big immigration wave in Europe, but probably not the United States. All right, so let's do some commodities, right? You guys want to look at gold, oil, and Bitcoin? Nuno! What's up, Nuno? Thiago says, between the yen and dollar, which one do you prefer? We have, right? Okay. Here's what I said in the end of August and the end of September. Typically, I'm a dove, all right? I'm a bear on US dollar and Japanese yen. Typically, right? That's right off the bat, that's what I'm thinking. And I'm going to try to do that. But I said, now that we're shifting between Fed policies, and there's a disagreement on timing, there's a disagreement on impact, right? And many other disagreements, that it's going to be more challenging, more difficult, less clear this year than other years. So I'm going to favor the Japanese yen. Okay? And I still think, I think that's been roughly the case this year. Okay? But it wouldn't typically be the same. Okay? All right. So let's take a look. So WTI, this came down pretty hard, not because the demand changed. Because remember, did we have the SPR discussion here, or was it in my groups? That might have actually been the swing trading group. Anyways, so we talked about this a week ago. And now there's talk that the United States will enter the Strategic Petroleum Reserve. Was it here? Okay, good. Now, as a capitalist, I think that's dangerous. I do not like government intervention. Now, you might say, well, Wayne's a crazy, hardcore Republican. He lives in the forest in his cabin and he collects guns and he preps. He's got 5 years of freeze-dry food ready to handle the economic apocalypse created by the government. Whoa, 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 whoa. I'm a capitalist. I'm an economist. Okay. Okay. So here's the thing. If oil prices are high, and by the way, why are they high? The government pumped a bunch of free money into the market. So the government already created the problem. Do you understand that? There's too much demand and not enough supply. Well, typically supply and demand match. So now trillions of dollars have been pumped in the market. Now the government's bitching about high oil prices. Well, they created the high oil prices. They created the high stock market. They created high real estate prices. It was all artificially created by the government, both the Fed, okay, and by the fiscal budget increases, fiscal spending. So now we have high oil prices. Well, COVID made it difficult to get supply, and now there's too much demand. That's all been artificially created. So now they're like, well, now let's artificially impact supply. Do you really want the government to make all your decisions for you? Okay? It's like everyone is getting upset about the media, right? Everything is so polarized now. Right? Everyone wants to know what Elon Musk tweeted today. Like, dude, that's your news? Okay? And they're like, there's so much fake news now. The government should take over because all the news is bad news. So we should let the government regulate it so it'll be better news. But if anyone, like if you take like, let's say Mexico in the 1970s and 80s, the government controlled the media. Well, you couldn't trust any of the media because the government controlled everything. Now, the government in Mexico was great because they didn't directly regulate the media, but they owned all the paper. You got to remember, this was the time when newspapers were actually printed. Well, the government controlled all the paper. So if they didn't like a newspaper because they were writing political stories that made them look back, then all of a sudden no paper arrived, literally no paper to print on. Okay? So what do you want? The government controlling everything so you get a bunch of fake news, or do you want, the blogosphere to control everything, right? But anyways, the government has put us in this situation. My problem, okay, I don't have a problem, I suppose, with the government stepping in trying to save the economy. I think that's needed, and that's why you do have a government. But now that oil prices are high, this is what's supposed to happen. You entice every entrepreneur to think of a way to get one more drop of oil out of the ground. Squeeze it out of a rock, suck it out of a rock, use chemicals to dissolve the rock and then clean out the chemicals and you're left with oil. You're going to find every new way to get oil, right? You're going to find new exploration. You're going to find new places, new techniques, new technologies, right? Devon Petroleum coming up with horizontal drilling and fracking, and you're like, oh, right, they found a way to go in and get more from the same. That's called entrepreneurialism. The way I described it, right, is you have capital and you have labor, right? And entrepreneurialism is how can you use the same amount of labor and the same amount of capital and get more output? That's entrepreneurialism. I didn't say better capital and better labor. How can you just combine these two things to get better results? That's entrepreneurialism. Okay, that's probably one of the most important things, a culture of entrepreneurialism. So now if oil prices are $100 a barrel again, you can fund these incredibly entrepreneurial projects. They're going to cost more in the beginning because they haven't scaled, but they can earn enough to do it. So now the government's going to come in and say, oh, let's drive oil prices down, and you just stymied entrepreneurialism. So if the government was so interested in lowering gas prices, because that's what they say, if gas prices are up, okay, the president's approval rating is down. Good. Cut taxes. It's something like 40 to 60% of gasoline prices are taxes. Cut them. Cut them. 6 months, no taxes. Come on, Bubba. Okay? Okay? So anyways, I would just say, look, I understand why the government pumped up the economy, but let capitalism work its way out. If gasoline prices are too high, buy a nicer car. More fuel efficient, okay? My Porsche gets 11 miles to the gallon. The Beamer, on the highway anyways, 40 miles. Okay? So, and oops, anyways, I'm trying to write. I think you know what I'm saying. So, like let's change this. So, okay? So when we drive to Grandma's house, we take the Beamer. Right? Right? When we go to Home Depot, we take the Porsche, right? So, dude, yeah, it will spur a positive change. That's right. And then supply and demand, right? This is demand. We'll find equilibrium. Just let it work itself out, right? That's all. So I'm just a big fan of that. Like, don't monkey around with both sides of the equation, because the next thing you're going to get, guys, this is what I'm really worried about as an economist. And you can do the math on this stuff. The next thing is it's price controls. And it has negative consequences. So I don't want the government to come in and start like fixing things for me. Okay? Because I don't think it actually can work. So oil demand for oil has not changed. Would you agree? Has anything in the last 5 or 10 days radically changed in demand? No. Okay? So why did price come down? The government's talking about tapping the strategic petroleum reserve, increasing supply. Okay? Lowering prices because supply will go up. And again, if you want to see that, I'll do it quickly here. Here's a little price, quantity, demand, supply. Okay? Okay? So equilibrium, here's your price. Price 1. Government wants to add supply to S2. New equilibrium price, price 2. Prices fall. Okay? Supply increases from S1 to S2. Okay? And this is oil supply. Or oil market, sorry. Okay, so they increase supply, price comes down, but it's all artificial, and I think on the long run counterproductive. Maybe on the short run, it brings down what gasoline prices, but 50 cents. Okay, all right, so there's that. Gold, huh? Who likes gold? Goldilocks, Baba. It's been gorgeous. Yeah. So now we're way out of position, and it's going to get interesting. We're at tomorrow's buying price. So if I were a bull on gold, okay, and then I got to mark this, and then you got your pivot point, right? Right? And I'll leave that there, and I'll move this over. Okay? So, what do we know? Buy zone, projected top. We knew this yesterday, guys. 187.7. Okay? 187. on the move. No, 1877. Oh. How do you like having that kind of accuracy? Okay. Vodka says monkeying with both sides of the equation will get them caught in the middle. Well, what happens? Here's the answer. If you're an economist or you're a student taking economics, and the question is, with a shift in supply and demand. Okay, what happens to price or something, right? Now, they're never going to word it this way, but I'm trying to get to the point. The answer is always the same, indeterminate. Okay, so at best, Vodka, if they're playing both sides of the equation, supply and demand, it's actually indeterminate because you don't know how much the supply curve is shifting, how much the demand curve is shifting, and is it long run, is it short run? So there's you could probably draw at least four different graphs, but you're going to get something like this: demand 1, supply 1, okay, and then increased supply to supply 2, but then increased demand to demand 2, and you kind of well, how much do you shift this one? How much do you shift this one? Because you can get one that says this, but then if you shift it differently, you shift it more this way and higher there, then you get this one. Or if you shift it there and this one less, then you get it here. And, well, it's hard to figure because some things are going to go up, some things are going to go down. And really one way you might want to look at it is you might have an equilibrium here, then it shifts here, then it shifts here, then it shifts here, and now you kind of are right back to kind of where you were. But of course, it's never even that way, and at the very least, you could potentially do a lot of harm. Okay? Now, there's a different way of looking at it. If the government's getting involved, really what you're doing is demand, supply, okay? And then what? The government can come in and put restrictions on here or put restrictions up here. And what happens is you cannot find, okay, be careful. Be careful. This is different, okay? This might not just be a typical setup, but watch, you still got your technicals, but try to pay attention to this, okay? Obviously, this is in terms of dollar, right? But anyway, so if the government comes in and a price floor or a ceiling, I know it looks backwards, but it's not. What happens is you cannot, okay? You can never get to proper equilibrium, okay? You're either going to have a surplus or a deficit, okay? And that's going to be the real problem. Okay. Now, my worry with oil is that it creates a deficit in entrepreneurialism. How would you like to live in a country that doesn't reward entrepreneurialism? I don't like that country at all. If oil prices are high, entrepreneurs will find a better way. Okay? If Elon Musk didn't come around and say, you know what, I want to make electric cars, I don't think the EV industry would even be a thing right now. Okay? Is there a reason why Germany is not leading the way on EVs? Is there a reason why France is not leading the way on EVs? Is there a reason why the UK is not leading the way, or Canada, or Australia? The United States is set up to be entrepreneurial. So guess what? A South African can create an electric car company in America and change the entire world. So if you stop that process, the world slows down. Okay? Okay, so anyways. All right, so anyways, gold. Let's look at the 4 hour. What does it tell us? Technically, this is bullish and I should be buying dips. What does it say in the 1 hour? You're probably on your price. Okay? Cool. Okay. What do we know here? Let's go to a 4 hour. We know this is no longer bullish and it's at fair market value. So there's no reason for it to continue falling and there's no reason for it to recover. So the market's going to have to figure that out. Now, I don't have the numbers, so let me log into something here. Let me log in to get some statistics. So, if you don't know, Joe Biden signed into law yesterday the infrastructure package. Inside of that, there's going to be taxes, because remember, they have to pay for all of this. They're basically going to tax crypto. Okay? Oh, man, I thought I'd get percentages. Hang on, let me go somewhere else, see if I can get a percentage drop. So, Ethereum in the last 24 hours has dropped 9.18%. Okay? Ripple dropped 8.55%. 8.5%. Ethereum 9.18. 8 and 9% drops overnight. Bitcoin has dropped 7.37%. AMP has dropped 10.22. Okay? My ADA, okay, 8.10% drop. My Shiba coin, Shiba Inu down 7.30. Okay? Crazy, right? I own GRT down 13%. I own Comp down 10%. I own Bounce down 9%. I own Clover down 14%. I own Fetch down 10%. Ho, 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 whoa. Alex, I bought it a while ago. It was Cardano versus Solano, and I picked one and picked the wrong one. I thought there was a good base case, use case, all that kind of stuff. Now, Cardano is up 5%, so it was down even more earlier, right? So it's recovered a bit. But those are big numbers, guys. Those are big numbers. Okay? No, those are overnight results, Matrix, not absolute. Those are the decline overnight. So Bitcoin lost more than 7% tonight. I think it was down almost 10%, right? So we went from 67 down to 58. So a $9,000 drop this week. Remember, I was on Bitcoin. I owned Bitcoin, watched it go up to 68, okay? And then I got out at 67. Well, maybe down here, a little lower than that, 67. Okay? Cool. Cool. Good for me. Okay, now Brinsley also says on top of that, there's a crackdown in China. Yeah, but we already knew that. But there was a warning last night in China that if you're an institutional miner, okay? Okay, if you're Oscar Miner Wiener, they're setting up legal recourse for these guys. Anyways, they're going to go after them more. But we already really knew that, but it's more bad news, right? Okay. And isn't there a Bitcoin upgrade coming? Does anybody know anything about that? Is it a Bitcoin upgrade or is it... There was some upgrade for somebody coming up. It's not a fork, I don't think. Okay. Oh, it's done? Okay. So maybe that's what has... Uh-oh. My Google Puck just told me it can't connect to the internet. So if I've lost internet, I apologize. Let me keep going. Ethereum, Bitcoin, all that kind of stuff. So I think we got it covered. Okay? Okay, I think we got it covered for the day. I think I'm about to lose internet. So let me bid you adieu. I'd also like to invite you to join FX Bootcamp so we can continue working together on your trading success, either daily or weekly. I'd like to invite you to visit tradersway.com and as a foreign exchange broker, give them an opportunity to earn your business, your loyalty, and your respect, and your trust. Okay? And there's a whole bunch of links in the description below. And as you head out the door, could you please click the like button? And it'd be great also... Oh, and I got a piece of news for you. Wait. Don't go. Wait. Okay? Our buddy Daniel... How many people know Daniel / the note guy, the notes guy? Where he takes detailed notes. Wayne said this and Wayne said that and timestamps everything. You know who I'm talking about? Yeah, I've officially made him an editor of the YouTube channel. So after he watches the video and after he takes notes, he's going to log in and put them in the official notes, all time-stamped. Wayne said this, click here. Wayne said that, click here. So I'd like to publicly thank him for everything that he does for the community. Yeah, he's been busy, but he's still doing it when he can. And once again, I'd like to thank him for his contribution because I know many people rely on it. And I think it's epically cool. So anyways... A round of applause for Daniel. And that just happened.